people call me Dar silver and all these things, but silver has been correlating more with copper than gold lately. Like you can do the math on that. They still correlate all three, but it's striking to see silver correlate more with copper than gold, and that's telling you something about silver's industrial side. And I think it's a mistake to just ignore that. But recently, silver has been, it's got its monetary metal mojo back. It's been correlated much more with gold. It's been moving strongly with leverage to gold. And so I can't ignore that.
Press, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Today, we're closely monitoring developments in the silver market, where Lobo Tiggre, a respected commodities analyst, has sparked significant interest with his latest insights. Tiggre, known for his deep expertise in precious metals, has observed a notable shift in silver's behavior, which could signal a major investment opportunity. In recent market trends, silver has shown a surprising correlation with copper, rather than its usual alignment with gold. This indicates silver's growing importance as an industrial metal, a factor that investors cannot afford to overlook. However, what's catching the attention of many is silver's renewed strength as a monetary metal. Recently, it has moved back into close correlation with gold, suggesting it's regaining its appeal as a safe haven asset. Despite some short-term price struggles, including a sharp drop earlier this week, Tiggre remains bullish. He notes that while silver recently fell below $28, hitting a 3-month low, this decline could present a strategic buying opportunity, particularly for those looking to capitalize on potential future gains. Turning to gold, Tiggre continues to recommend it as a top pick for investors. Even though gold has seen some softness, driven by a stronger dollar and rising bond yields, Tiggre's outlook remains positive. The possibility of rate cuts by the Federal Reserve as early as September, coupled with ongoing geopolitical tensions, could stabilize and even boost gold prices.
We appreciate your support.
That's not what I mean. When I say Fed pivot, I mean, it slowly at first, then all at once, right? I mean, the weakening gets much weaker, and the Fed says, this is now systemic risk, or this is now our second mandate. And so it's not just a gentle thing. It's like, oh no, we need a looser monetary policy. And that may not mean like, a jumbo rate cut in September, but it would mean, 25 or 50 in September, and a significant change in the policy statement, highlighting the other mandate, the full employment mandate, and the systemic risk and that sort of thing. And then you would, maybe even not have to wait for December. You would see a more aggressive Fed loosening cycle come in, if I'm right about the recession becoming undeniable. Now here's the beauty, Kai, sorry. I know you're going to go there. If I'm wrong, and all we get is what the market expects, 1 or 2 rate cuts by the end of this year, there's still rate cuts. That's actually still bullish for gold, even without the recession. And to look at, like, the mainstream expects something that's bullish from gold from a $2,300-$2,400 level. That's pretty exciting. It had been, okay, this year it's gold. It's still gold. But I've added silver back into the mix because silver has been, people call me Dar silver and all these things, but silver has been correlating more with copper than gold lately. Like you can do the math on that. They still correlate all three. But it's striking to see silver correlate more with copper than gold. And that's telling you something about silver's industrial side. And I think it's a mistake to just ignore that. But recently, silver has been, it's got its monetary metal mojo back. It's been correlated much more with gold. It's been moving strongly with leverage to gold. And so I can't ignore that. So I've put silver back on my shopping list. The other thing is I was, a year ago, I was bullish on uranium, but then, uranium doubled since then. It went over $100. Now it's correcting. And so I might have said, okay, I got delivery on my expectation for uranium. But it has corrected, and it's gotten to sort of this boring phase where it's just not doing anything, the price, the spot price, that is. The market, though, is going gonzo. The supply-demand equation is just crazy. The amount of demand continues to increase. Like, we don't even need more demand. The existing nuclear fleet needs more uranium as is, but we already had a demand, a growing demand scenario, and that just keeps sharpening. The acceleration curve is increasing, where the BRICS countries in particular are building them gangbusters. Scores of reactors under construction, coming down the pike. And at the same time, supply is not keeping up. That's not new. That's, the spot hoovered up all those secondary supply pounds, a while ago now. But there was a question about whether high prices would cure high prices, and how quickly would that be? Well, we're seeing the answer to that question now. So what I'm saying is uranium has gotten really exciting again, but sort of in a stealth mode. Since the spot price isn't moving at the moment, people got bored with it. Their attention has wandered off. I think that's fantastic. Anybody who missed the big uranium, surge last year, I think this is your next best time to get in. So that would be my talk this year. I'm still in Team Hard Landing, as you and I were discussing before, extremely bullish on gold. If I'm wrong about that, even the Fed is saying it's going to cut this year. That's bullish for gold too. So it's either bullish for gold or really bullish for gold. I'll take that trade, right? And add silver in there and uranium. So that would be my talk, my three favorite metals for this year. Maybe, not breathtaking the original, but for what...
In his view, the combination of low interest rates and economic uncertainties provides a fertile ground for gold to thrive. Interestingly, Tiggre is not just eyeing precious metals. He's also revisiting the uranium market, where he sees a strong investment case. Despite a recent lull in uranium's spot price, Tiggre points out that demand continues to rise, particularly from BRICS nations, which are aggressively expanding their nuclear energy capacity. With supply struggling to keep pace, uranium could be poised for a resurgence, making this a market to watch closely. As we look ahead, the U.S. economy remains a focal point. Goldman Sachs has recently adjusted its recession forecast, raising the probability to 25%. This growing concern over a potential economic slowdown in the world's largest economy has implications that could ripple across global markets. Tiggre believes that if a recession becomes undeniable, we could see aggressive monetary and fiscal policies aimed at cushioning the blow, which would likely be bullish for metals across the board.
That as soon as that becomes undeniable, the money helicopters fly again. So I'm not saying greater depression, and for that to happen, the powers that be would really have to lose control. Like, the money helicopters would fly, rates would drop, and more stimmy checks would come out from Congress, and it wouldn't work. Like, if they did that and the economy still tanked, and then you could get the greater depression that Doug Casey's been talking about, and so on. But I don't actually expect that right now. Twice bitten, 5 times shy on that one.
It would mean that U.S. be completely cut off from the debt market, I think, if that were to happen.
If that would happen, then Brent Johnson might be wrong, and we might see the demise of the dollar as a reserve currency a lot faster. And a lot of things would happen. If that would be big, that would be historic, that would be a total game changer of the global economic order for the U.S.'s house of cards to finally collapse. That's we can write a science fiction novel about that. Let me put it this way. That could happen. That is, let's call it the Joker card in the deck we're playing with. No way to say if that's going to turn up this next hand, or, we could play many rounds before that turns up. But it's in the deck. That could happen. My answer to your hard landing question, yes, I'm in there. But my point is that I think they'll try to paper it over. They've shown, a great deal of success doing that. They've trained the stock market to think bad news is good news. So undeniable recession could actually make the S&P 500 soar to 6,000 or something, or we could be talking Dow 50.
We're not that far off,
right? Well, okay, right. So make it 7,000 or something, whatever. We could see truly, we think everything now is in ludicrous mode, that Elon Musk ludicrous mode button. Right? Even that could be nothing compared to what happens if seriously bad news is treated as good news on Wall Street. So I don't want to get distracted with Wall Street. The point, though, for us as resource speculators, gold, silver, copper, uranium, all these other metals that we like in our mining stocks, is that if instead of going through the meat grinder in the recession, we get the money helicopters flying and we get a reflationary boom, the recession could be the thing that sparks the next big leg up. So in a way, they're making a kind of a bullish case, even for industrial metals. And my only hang up there is, and again, the practical takeaway is we have to have that undeniable recession first. They're not just going to inflate this next huge bubble because Joe Biden wants to get elected again. He's unelectable now anyway, never mind. We don't have to go down that rabbit hole. The point is that it has to become undeniable first. That's what I mean by hard landing. And then once it becomes undeniable, I do think we see a major pivot, not just the Fed, and that has me actually very bullish. I think it's extremely inflationary. It's very bullish for all the things all our dear audience holds dear.
Investors, this landscape presents a complex but promising scenario. Whether it's the potential for a Federal Reserve pivot or the strategic importance of industrial metals, the opportunities are there for those who stay informed and ready to act. In conclusion, Tiggre's analysis paints a picture of a market ripe with potential, particularly in gold, silver, and uranium. As we navigate these uncertain economic waters, these metals could very well be the pillars of a robust investment strategy in 2024. Stay tuned as we continue to bring you the latest insights on these unfolding market dynamics.